Hello everyone and welcome to Hack.com's weekly webinar wrap-up for April the 6th or April the 7th, 2018, depending on where you are in the world. My name is Sam Borgi, Chief Editor at Hacked. Thank you for joining us today. As you know, every week we like to give you a recap of the major developments in the cryptocurrency market. There's a lot of anxiety going on right now in the crypto sphere as the market isn't behaving to our liking. However, I'd like to remind a lot of traders that, you take a look at how crypto values have risen over the past year. We are still doing a lot better than pretty much any other asset class. So we are coming off a very difficult quarter, but that's because it was difficult given where we were, one quarter ago, right, when we were at record highs. So there's been quite a pullback in the market. Bitcoin, Ethereum, the altcoins have experienced significant declines. And we're going to talk about why that may be the case, look at some of the major movements in the market, as well as some of the themes that we're tracking as we head into the second quarter. Again, reach me anytime at sam@hack.com or leave us a comment in the comment section below. We'd love to hear from you. So, the agenda for today, we like to keep it nice and simple, and these 4 bullet points really guide our discussion today. We want to give you a weekly recap of the market, looking specifically at the crypto sphere as well as any other major coins and the movements that they made. We want to give you a recap of what went on Hacked and what you can watch for next week. So the main theme for this week was the cryptocurrency downturn. The market downturn continued throughout the week with the total value of the market falling below $250 billion for the first time in about 4 or 5 months. We did see a minor bounce around Tuesday. The market recovered to around $283 billion. It looked like we were in the mid of a decent recovery before the bears took control of the market once again and dragged everything lower in the latter half of the week. Bitcoin fell below $6,600 on several occasions, and then actually came really close to the recent low of around 6,400 to 6,450, depending on which exchange you use. That seems to be a major breaking point for Bitcoin, and that if prices cross below that level, we could see a bigger reversal or even a more protracted downtrend than what we've seen recently. That's what the technicals say. A lot of people argue that the technicals are less relevant for cryptos given how young the market is and just given how volatile the price swings are. That's what often happens when you work in a market that isn't as liquid. You see volatile price swings, and we've been keeping close track on the daily volumes for cryptocurrencies. I would say they've been around between $12 and $15 billion for much of the recent decline that we've seen. Ethereum just rounded out a disastrous quarter with declines of around 50%. Ether fell more heavily than other cryptos, especially in the last 6 weeks of the quarter. We were looking at a period of relative calm for Ethereum relative to the overall market, but that virtually disappeared this past week. And Ether has been one of the major decliners as of late. However, a lot of people remain bullish. If you're bullish on ICOs, or if you think the ICO market has a future beyond the initial craze, which all signs seem to indicate it does, Ethereum seems to have steady demand as more projects launch on this platform. We are seeing competition from other platforms, Stellar, even EOS, but nobody compares to Ethereum in terms of the number of projects that are launching on this platform. A few other developments we want to talk about. One that is very near and dear to my heart, the SEC has begun proceedings for the first Bitcoin ETF. This doesn't mean that it's going to launch anytime soon, but we saw, based on some literature that was released on the SEC website, I believe dated around March 23rd, that they will begin formal proceedings, opening the door to speculate, to analysis on whether, changing certain rules to list Bitcoin ETFs on the NYSE Arca exchange is feasible. We know that the Chicago Board Options Exchange, CBOE, is strongly pushing for crypto-based funds. In my opinion, it's only a matter of time before this happens. We have already seen Bitcoin futures, and a lot of these Bitcoin ETFs that are being proposed, they're actually ETFs that track the Bitcoin futures price. So there is some kind of marker there, of a reliable marker, the futures price. So we've seen a number of issuers that have actually withdrawn their bids, going all the way back to December. But it seems like the conversation is resurfacing. It's not going to go away anytime soon until that first crypto asset in fund form is launched. So keep your eye on those discussions. I'm closely watching the space, and if there's anything changes in the SEC's tone, I'll be sure to let you guys know. Also, the Bank of India issued a ban on cryptocurrency, or essentially banned state-regulated financial institutions from dealing in Bitcoin. And at one point, we saw Bitcoin fall to a low of 5,400 USD on the Indian exchanges. Of course, that's the conversion rate when you look at rupees. We wrote an article about that yesterday. We saw over 24% declines for all the major cryptocurrencies traded in India. So not very good news from a regulatory perspective. However, India remains a very small market for cryptocurrency trading in general. The biggest markets remain the US, China, South Korea, Singapore is up there, of course, Japan. So this is the chart for Bitcoin over the past 5 days. You see the peak that we reached near 7,500 around the 3rd or the 4th of the month earlier this week before the protracted downtrend. A lot of it seemed to have been associated with the broad decline that we saw in stocks earlier in the week, but mostly there's been speculation that the trade war going on between the US and China may be influencing a lot of other markets, Bitcoin being one of them. I'm not entirely sold on that argument. I just think we're in a negative vibe for the cryptocurrency market right now. It seems like regardless of what the developments are, the market is correcting lower. We will be releasing more articles covering taxation. That seems to be a factor. Tax season is coming up for U.S. investors. Many people are liquidating their position to pay off the tax man. So lots of those developments going on. Overall, fundamentally, the market hasn't changed very much, but sentiment certainly has as the correction deepens. So the global cryptocurrency market, you see the trends here. At last check, we were hovering around $250 billion. Week on week, we're down about 10 to 13 billion. So another down week in terms of the broader crypto market cap. Just a reminder, the market peaked above 830 billion earlier in the new year. So that covers the crypto aspect of our webinar for this week. I want to say a few words about the stock market. I mean, volatility made its return. It's really been back since early February. We saw volatility surge again this week. And how about this for development? The S&P 500 just rounded out its worst start to April, its worst start to Q2 since the 1929 Great Recession. So stocks declined, I believe, around 2% or more than 2% on Monday. They experienced a broad recovery in the middle of the week and then crashed again on Friday, with the S&P, the Dow, and the NASDAQ falling more than 2% on Friday. The declines seem to have been triggered by two factors: a weak non-farm payrolls report showing the creation of only 103,000 jobs in the U.S. economy last month, as well as escalating trade tensions between the U.S. and China. I'll touch upon that a little bit later. The FANG stocks, we're looking at Facebook, Apple, Alphabet, or Facebook, Apple, Amazon, Netflix, and Google parent Alphabet, declined $324 billion between, I think it was March the 12th and early April. A lot of that has been triggered by Facebook's privacy scandal around Cambridge Analytica. Facebook right now is really facing perhaps an existential crisis as usage is down and investor sentiment has soured. A lot of major advertisers have also pulled their ads from Facebook. Something to keep in mind. So we have been talking about the U.S. and China trade war. We know that the U.S., the Trump administration, issued a tariff list targeting $50 billion worth of Chinese goods. That was passed by the Trump administration. China seemed to have offered an olive branch earlier by saying, okay, you know what, we'll buy more U.S. semiconductors. I know one Chinese ministry talked about Washington not letting it buy the products that it wants to buy because there are restrictions, I think, around certain defense material that China can't purchase from the U.S. However, China has announced that it is considering reciprocal tariffs of up to $50 billion on U.S. goods. I believe the initial amount was only $3 billion. It is now $50 billion. So Trump has gone on to say recently, I think it was on Friday or even Thursday, that we will consider an extra $100 billion worth of tariffs. We're going to be considering that moving forward. So the $50 billion number that was quoted initially by Trump seems to have been associated with a previous study that was done by the White House showing that that's how much intellectual property theft the U.S. has faced from China due to the unfair trading practices. So if the U.S. were to add $100 billion to that list, China won't be able to compete with that because China only imports about $130 billion worth of U.S. goods per year. So if the U.S. now is going to be putting duties on $150 billion worth of Chinese goods, China can't go up that high. So I just wrote about that recently. I mean, I think that a lot of people are underestimating the impact that this tariff battle will have on China, especially at a point in its trajectory where its growth is slowing as its centralized government is trying to create more of a consumer-focused economy, right? China now has the biggest middle class in the world. It wants to develop an economy driven by consumer spending, not so much manufacturing, kind of like what we see in the West. Overall, the CBOE VIX rose again on Friday. It's up 95% since the beginning of the year. In terms of Hack.com, we've been pumping out ICO analysis all week. We'll continue to do so over the weekend and next week. Some of the noteworthy reviews that we've done have been Hyperion, EOS DAC, as well as Ethereum. Lots more coming on that front. In terms of the most read articles of the week, you have the planning for the crypto price recovery. A little bit I wrote there on the SEC initiating formal proceedings on the coveted Bitcoin ETF. That was written about on Thursday. Why Bitcoin is tanking and why you should keep your cool. Jonas wrote that earlier in the week, kind of trying to bring some levity to the situation or try to bring some calm back to investor sentiment. You know, let's try to look at it from a different perspective and how you can prepare for what many believe will be the inevitable rebound for crypto assets. We have a long-term crypto analysis up there, as well as Ripple striking out on major exchanges. Essentially talking about Ripple trying to pay its way onto Coinbase and Gemini, but doing so unsuccessfully. That's just some of the just a brief taste of what you can expect to see with a Hack.com subscription. Moving ahead to next week, we are keeping our eye on U.S.-China trade relations, of course. That's been dominating the market as of late. Corporate earnings will really begin to kick off. We're expecting a very solid quarter of growth, and that could help offset some of the volatility that we've seen recently tied to trade war risks. Economic data will also be in the headlines. US CPI data is coming out. We're going to be looking at Bitcoin price trends more carefully because Bitcoin now accounts, again, for more than 45% of the crypto market. If you all recall, it bottomed at around 32% in the early new year. Looking at cryptocurrency and institutional adoption, will this come by way of futures? Will expectations of an ETF boost institutional adoption? We're keeping track on that narrative and expect more articles of the same moving forward. That covers it this week, everyone. Thanks for joining us. Visit us at hack.com. Subscribe to our channel if you haven't already, and we'll catch you next week. Take care.